Welcome back. Markets on edge. Investors are rattled by Gary Cohn's resignation as President Trump's top economic advisor. Cohn was trying to soften the president's position on tariffs, but he lost out to a more protectionist view from Peter Navarro, Wilbur Ross, among others. Joining us now to talk more about it is Steve Auth. He is the Federated Investors Chief Investment Officer. Stephen, it's good to see you this morning. Thanks so much for joining us.
Thank you for having me, Maria.
Are the markets getting it right this morning, selling off on this news?
They've been, as you know, Maria, they've been selling off on almost any news over the last 2 weeks. I mean, we're trying to retest that low we put in back in February. You know, first it was the inflation scare. We got good numbers on Friday on the inflation front. The market started to rally on that, and then we had the tariff announcement mid-morning, and we had that sell-off, and we kind of clawed our way back later in the day, and now we're having, another sell-off on Cohn. I think, let's face it, this is not a surprise that Cohn is leaving the administration. This has been rumored for some time, so I don't think it's that big of a news for the markets. But I do think a lot of folks who feel the markets are overextended are finding an excuse to get out. We're trying to retest. I don't know that we'll get much lower than the February lows, frankly.
Yeah, but I understand
we're
that.
pretty bullish.
What I'm really trying to understand is the backdrop. I mean, you've come on the show before and talked about good economic growth, about job creation, about the positive impact of the tax cut plan and the rollback of regulation that this president has been leading. Does this change that? Does the idea that now these tariffs are going through, Gary Cohn lost out to a different agenda, does that take away from economic growth, which is, of course, the backdrop for these markets?
Well, I think it would, Maria, if we're really going into a real all-out trade war with tariffs on everything we produce in the U.S. and vice versa. I just don't think that's what's going on here. The president is for free and fair trade. All of the current rhetoric around free trade and, economics 101 at Princeton or whatever assumes that trade starts as fair, and you don't put tariffs on uncompetitive industries to try to protect them. That's a kind of path to nowhere and to slow growth. But this is a situation, none of the arguments in the last 4 days that I've heard presented have asserted that the Chinese are not cheating. In fact, they are. Everyone knows it on steel and aluminum. I think the president's focused on that. He's trying to make trade fair. Right. But we've all read his book. He's not going to state his full position. I mean, how can you negotiate like that? So, okay. Other people believe differently. We'll see how this plays out. Yep. We need to see the details. I'd be very surprised if the Canadians, in the end of the day, who are so important to our auto industry and are not cheating, very hard to see, that we're going to have tariffs on Canadian steel.
Stephen, real quickly, Mitch Rochelle here. I want to talk about the trade war and its impact on the consumer if we potentially have reciprocal tariffs and what impact that's going to have.
The president can't do a reciprocal tax. That's Congress.
No, my point is if other countries start imposing tariffs on us and then it raises the price of consumer goods, raises the price of what we import in the supply chain, and then all of a sudden we see corporate profits turn the other way. Is the market looking at that as a possibility and starting to bake that into outlooks for future earnings?
Oh, I don't think that's really fully baked in. I would say, though, that scenario would be very negative for the market if we went to a full-blown trade war with tariffs randomly on all consumer goods. That's not our presumption at the moment. I don't think we have any evidence that that's the case. It's been very interesting. The Chinese haven't really responded to these assertions. So, I mean, if we go there, that would be negative for sure. I agree. I just don't think we're going that far.
Real quick, you're still putting money to work in stocks?
We are. We added back on the February lows, Maria. We have not re-added again, but if we do retest 2,600, I think down there we probably would add again. We're already overweight, as you know.
Stephen, it's good to see you this morning. Thank you.
Thank you, Maria.
Steve Auth from Federated this morning.